QuickBooks Pro Plus Desktop 2022 Bill Form. Get ready because we bookkeeping pros are moving up the hilltop with QuickBooks Pro Desktop 2022. Here we are in our free sample file, Sample Rock Castle Construction. We're going to go through our setup process, that being first opening the Open Windows by going to the View dropdown, selecting the Open Windows list. We have the Open Windows list on the left-hand side, nothing in it yet. We're going to then open up the home page by going to the company drop-down home page. It then opens up in that gray area, not yet maximized. I'm going to maximize it into that gray area. We see it now in the Open Windows left-hand side. Next, I open the major two financial statement reports, balance sheet and income statement, because everything we do here on the data input, including this time focusing on the bills, we want to think about the impact will be on the major financial statement reports, balance sheet and income statement, and then think if there are any subsidiary reports supporting a line item on those major financial statements, as there will be here with the accounts payable. So we're going to go to the reports drop down up top, company and financial. We'll take a look at the balance sheet standard report, balance sheet standard. So there we have it. I'll keep the date range where it is at here. Next, we're going to go to the reports drop down one more time, at least for now. Go to the company and financial. We want to open up the P&L, profit and loss, otherwise known as the income statement. We can then change the date up top. I'm just going to make it from January on out to the end date that they've given us here, which is 12/15/23. So we have our three items open. Let's go on back to the home page, toggling between these items. We're focusing in the vendor section. The vendor represents people that we pay to. So that's the side of the table that vendor means in this context. We are paying for goods and services to other people, either doing so by having a check that we would pay them for directly, decreasing our checking account, which could also represent an electronic transfer, or we're going to then enter a bill. So we're looking at the option this time of entering a bill. When we think about a bill, that's going to be increase in the accounts payable. So for QuickBooks, it's a little bit different than normal kind of terminology you might use even in the accounting department. And you want to keep this in mind as well. If you're thinking about QuickBooks terminology and accounting terminology, and then just normal day-to-day terminology, they can all differ. The field of accounting is going to have specific terminology related to accounting. The field of QuickBooks will even have more specific terminology with regards to QuickBooks. The term bill could mean a bill that we send out to other people for work that we have done, or services we have provided, or products we have given, or it could mean bills that we have received, and it could mean a bill that we have been paid or has not yet been paid, or we're going to pay with a check or cash in normal kind of language or even accounting language. When you talk about QuickBooks, however, the bill form, and these items are typically called forms, not just simply because we're going to give a form to somebody else per se, because the form, however, is a data input form that we're going to use to more easily populate the data and then allow QuickBooks to use that standard format to then create the financial statements. So the bill form then is more specific with QuickBooks. It means that we are receiving the bill from the vendor. We're not giving the bill to somebody else. And it also means that we're not just paying the bill with a check or electronic transfer. We're actually entering it as a bill. It means, in other words, the accounts payable is going to increase. So that's what we're concentrating in on here. If we go into the bill, we're not actually going to create the bill at this point in time. We'll do that in the second half of the course when we enter new data. We're just analyzing, in essence, for the most part, the data that's already in the system. So when you open up the bill, it looks like a check, except it says bill up top, and the format and layout will look much like the check because it's going to, in essence, do the same thing, but instead of decreasing the checking account, it's going to be increasing the liability until you pay it off. Once you're in the bill, you've got the summary data on the left. On the right, you can close that out with this little icon. You might want to close out the window so you have a little bit more space. Up top, you got the main information. We can go back to the prior bill. Let's go ahead and do that now. I'm going to go back to the prior bill. And so here's a bill that we have seen, the kitchen and bath information here. And then we have up top, we got the new, so you can create a new one. You could save it. You can delete the information, create a copy. You can memorize the transaction, which we might talk about later. You can print the bill, which may not be as applicable as other types of things to print it, such as an invoice. You can put an attachment on it. So if you wanted, for example, to take a picture of the receipt or something like that to put evidence or proof of the bill, then you can attach that. That could be quite useful. You could select the PO. We'll talk about purchase orders when we think about the inventory information. You can enter the time. You can clear the splits, and that'll have to do with the breaking out between the items and the expenses tab. So, and then we got the recalculate, so you can recalculate the information, upload and review the bill, and then you can say that you're going to pay the bill here. So if you hit the pay bill item, then you can go to the payment of it, which will take you to the second component directly. I'm going to close that back out. I'm going to close that back out at this point in time and say, do you wish to record them? I'm going to say, no, don't record that. So we're back then to the bill. If you go back up top on the reports, this is something that isn't used quite as often, but it can be useful. You got the quick reports information up top. If you select the quick reports, it gives you the vendor report related to that particular vendor that we were taking a look at. If you then take a look at the transaction history, it's going to give you the transaction history for that vendor. If you look at the transaction journals, it displays the journal entry what QuickBooks makes behind the scene for this transaction. And this could really help you out when you're thinking about what is going to be the impact to the financial statements when you do these data inputs. If you learn QuickBooks before you learn basically journal entries, then these kind of formats to go back and forth from the financial statements and look at these transactions to see the accounts that will be impacted can really help you out to get both sides together, both the journal entries in terms of how the financial statements are made, as well as the data input for the bills. The item list is going to give you an item list basically of the things that we are selling. We'll talk more about items later, but that often has to do with inventory with regards to the bill items. Open purchase orders. This has to do also with inventory. We'll talk about in a future presentation how purchase orders fit in. Vendor balance detail. So this will give us our vendor balance detailed report, which we can also generate, and most of the times we'll generate that separately just in the reports section. The unpaid bills detail. This gives us a report of the bills that have been unpaid, which we can also find in our reports, which we'll talk about later. I don't usually go to that report from this section, but you can. Purchases by vendor detail. So then you can take a look at your purchases made by vendor, another report that you can generate from the reports section. So this second tab, not used quite as often, but it could be useful. I think that transaction tab and the journal entry could be quite useful to get an understanding of the journal entries that are being involved, especially when you have more complex types of bills that are going to be in the data input. The construction looks just like a check for the most part. Up top, we got the vendor. Note that we can create a new vendor as we go. So the vendors are people that we are paying. If you're doing like a normal bill for something that's going to be like the utility bill or the telephone bill, then you might not have much more detail on the vendor. You just need the name and who to send it to, how to make the payment. But other vendors, you might want a whole lot more detail so you can track, such as who you're purchasing inventory from. If I scroll all the way to the top, we have the new add new. You can add the vendor in essence as you go, as opposed to, as we saw in a prior presentation, going to the vendor center, as we saw before, vendor center, and then adding the vendor there. You can just add them as you enter the transactions. So the next item we've got is the date field. So that will oftentimes populate automatically as you enter the data, which is nice because it'll record this expense at the point in time you enter the bill, even though you're not paying it at this point in time. We've got the reference number. We've got the amount that will be due that you can populate. Then the due date, and this could be in alignment with the terms, meaning it'll populate automatically given the term down here of net 30, meaning you entered the bill here on 12/15, you expect to pay it within 30 days. You can change these terms and you can change the due date to whatever the requirements are on the bill. That will help you to sort the bills when you decide to pay them and then be able to pay them basically as late as possible without getting penalized. That's your cash flow strategy, right? You want to enter the bill when you get it. You want to then set the date when it's going to be due. And then that could be done with the terms here, automatically setting the due date, or set the due date so that you can then sort the bills and pay them as late as possible, holding on to your cash as long as possible. We got the memos, so it's always good to add a memo if you have more detail that you want to put, so that when you go back into the transaction, if you have questions about it, you get more detail from the memo there. Then you have two tabs on down below. You got the expenses tab and the items tab. Most of the time for normal bills, you're going to be entering things into the expenses tab. Now, the expense tab can be a little bit confusing because you may not always enter expense into here. A general rule is it's going to be using the expenses tab when you want to hit an account directly and you don't need any sub ledgers to be involved. And that sub ledger is generally inventory. The items tab deals with inventory. So if you're tracking inventory, you don't want to decrease the inventory account directly with just a journal entry to it, because you want it to be supported by the inventory. Therefore, you're going to have more information related to the inventory part, as we can see here, that you're actually selling if you're tracking inventory in QuickBooks. If you don't have inventory, you will most likely be using the expense tab. So normally what will happen then is that this will increase because it's a bill. It's going to increase the accounts payable. And then the other side then is going to go usually to whatever expense account that you would choose down here, some kind of expense account, and it would then increase the expense account. The bill then, or the accounts payable, increasing a liability that you owe into the future, in some point in the future. The expense account then typically increasing the income statement. However, you might be purchasing inventory. If you purchased inventory, you use the items tab. We'll talk more about inventory later, which would increase an asset of inventory. But you also need this added information for what types of inventory you're purchasing if you're tracking the inventory. If you go back to the expense tab, you might say, well, what if I pay money out and I put it in as a bill and I purchase like equipment or something like that I need to capitalize as a fixed asset? Then you would choose the fixed asset here, and you would still use the expense form, even though you're increasing a fixed asset account. We'll talk more about those kind of details when we get into the practice problem in the second half of the course. So then you could save and close it. You could save and create a new bill if you so choose. You can revert it. Closing this out, I'm going to say I don't want to change it, so I'm going to say no, don't keep the changes. Once you have entered the bills, then you go to pay bills over here at the point in time that you want to actually pay the bills. And we'll talk about this in a future presentation. But now the bills that we have been entered are on the left-hand side. We can sort and filter the bills that are due here, and then we can choose to pay the bills that we want to pay and try to use our cash management strategy to pay the bills in such a way that our cash flow will be okay and that we can avoid hopefully penalties and interest and hold on to the money as long as possible. That strategy becoming more and more important as we have more transactions involved. So I'm going to close this then back out. I'm not going to record anything here. Now if the couple other places you can track then who you owe money to. Let's first look at the financial statements. I'm going to open up my window on the left-hand side. We're going to go to the balance sheet. Any bill that has been entered that has not yet been paid, if I go down to the liability section of the balance sheet, will be down here represented in this number. That means we owe $26,636.92 to somebody. The next question will be, who do we owe that money to? Now you might say, well, what can't I just, you can double click on this and that'll give you like the transaction detail. You could see bills, you could see pay bills. That's all that's in the accounts payable account. It's constructed, increasing with the bill and decreasing when we pay the bill. But it doesn't give us it gets the information by date. It doesn't give the information by who I owe the money to. Therefore, we process other reports which are going to show who we owe the money to. So if I close this out, for example, and I go then to another report, the supporting report for this, reports drop down. We go to the vendor payments. We then want to go to the accounts payable. You could look at the summary, the AP detail. Let's just take a look at the vendor balance summary. Vendor balance summary. This account adds up to $26,636. That should tie out to what is on the balance sheet, also at the $26,636. If I go into the vendor balance detail here, you could then see the information basically by vendor. If I go into that detail, double clicking on it, now we've got the transactions by date but it's also in alignment to a particular vendor. And once again, if it's a vendor, people we pay money to, we're going to see it go up with a bill, and then we're going to pay the bill. Those are going to be the common transaction. It's going to go up. We should be able to tick and tie them off as they go. It's going to go up with a bill, and then we're going to basically pay off the bill. That'll be the standard transaction. You can always go into these accounts and drill down back to the source document. This is a really good way to understand what's actually going on within the bookkeeping system. Going back to your reports, drilling back down to the bill. Here's the bill that resulted in that increase to the subledger. Closing this back out. And then if I go back on over to I'm going to close this one out, closing this out. If I go back to the balance sheet, so let's just think about the normal kind of process that's going to happen with a bill. If you enter a bill, double clicking on the accounts payable, it's going to increase the accounts payable, such as this item here increased the accounts payable on 1/2/23. If I double click on it, I can drill down to the source document, the bill, and I can see what the other side went to. And this one, it's a little bit more confusing because it's a job cost type system, but it went to job 5400. It was a job expense for 5400. So then if I go to the income statement, and I go to the income statement, I'm looking for 5400. It's a job expense, and I think it was 543. So if I double click on that item, you're gonna see the other side. There's the 1500. You could see the split account here going to account 2000, which is the accounts payable account. So if you look at this detailed reports, what you want to do is go back and forth to the reports and see the journal entries. There will always be at least two accounts impacted with, in essence, every form that you enter, except basically a purchase order, which doesn't have a transaction related to it. And you want to go back and forth and see what the impact is. If I double click on this, it'll take me, of course, back to the bill. So there's the bill. I'm going to close this, then back out again. So if it shows up on the transaction detail, it'll show up as a bill. The bill means, for QuickBooks, it means that accounts payable is going up and the other side is going wherever we told it to go. Oftentimes an expense, but if you have inventory, it's going to be increasing then the inventory item. So I'm going to close this back out. And now the other place you can track the bill information, if I go back to the home page, is you could say, okay, once I've entered the bill, then you might want to look by the vendor in the vendor section or the vendor center. Go into the vendor center here or drop down vendor center here. This is another area where you can basically analyze the transactions, including bills that have been entered. For example, I might want to sort by the vendors that are open. So I got open transactions. So if I selected this one here, I could see the activity that's been going on for this particular vendor. We could, of course, see the bills that are compiling here. We can also go to the transactions on the second tab and search, say, by the bills. If I go to the bills and I want to look at just the all bills, we could see all the bills. We could see the open bills here that have not yet been paid. So these are some other areas that you can go and you can use to sort the bills. If you work at a large company, then you might be working in accounts payable and you'll spend a whole lot of time sorting out the bills and dealing with the accounts payable types of issues. And so that's the general side of the bills. In a second presentation, opening this back up, we're then going to go to the second side, which is going to be the pay bills. And then we'll talk about dealing with inventory in future presentations, including the purchase order and so on.